Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, Charles Dillatorre, and Ashley Buckhold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, plus use our combined experience to tell you what it all means. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's actual second episode of The Lumber Word, where we're dedicated to bringing the lumber industry the latest market trends and innovations. And today I am excited. We've been working on getting this together for a while to have Alison Coughlin from the CME, Chicago Mercantile Exchange, on to talk a little bit about the exchange, but most importantly, highlight the new 2x4 number 2 Southern Yellow Pine contract. And for anybody that doesn't know anything about the CME, you should. They're one of the leading, if not the leading, world derivatives marketplace. They kind of offer innovations and risk management solutions in most commodity items. So, Alison, welcome to the Lumber Word.
Thank you for having me. I'm excited that we got to make it happen.
Absolutely. It's been a while. And first of all, I would like to get your exact title and your team's title to talk a little bit about what you and your group do.
Sure. So I am a director of commodity research and product development at the exchange. Our research team encompasses all of our asset classes, but my team focuses on agricultural products. So I'm mostly grains and oil seeds, but also fertilizer and, most relevant here, lumber. So we're responsible for maintaining our existing product portfolio, creating content, and really being thought leaders and subject matter experts on the products that we own and manage, and launching new products like the Southern Yellow Pine contract.
And just so everybody listening to this in the forest products market understands, the CME, it's been active in the forest products market like since the early 60s. And you now have 2 contracts, and you have I want to say the original. What's the best way to say to divide the 2 contracts up?
That's a good question, because we had the legacy contract that was launched in 1969, but we hadn't really amended that in quite some time. So when I took over the management of the lumber contract or lumber portfolio, probably 8 or 9 years ago, there were definitely some modifications that needed to happen. And so we revamped that and sort of relaunched it as its own contract. So I either call it LBR, which is the ticker, or the SPF contract, now that we have a Southern Yellow Pine contract. So I sort of use those 2 terms interchangeably.
That's great. If people just want to look at a delayed contract price, they may not be trading anything yet, but may just be interested in looking at a price, they can get that from your website, right?
Yeah, absolutely. We are on a delay, but all of those prices for all the forward curve, every month it trades, you can go on our website and see those prices.
Yeah, and for people that want to go on it, there's a lot of information on there. Once you start clicking through, digging through, there's a lot of free information on there, and I suggest people do that. So just real quick, personally, how did you get started at the CME, and kind of what drew you into commodities, research, and all that? Because from working with you for years, you really dig into the details on things.
Well, I'm an economist by education and training and trade. So very detail oriented, but I started in ag economics, and I've always been interested in the commodity side. I know it's maybe not the most glamorous according to a lay person, but I think we eat food every day, we wear clothes every day, we live in houses. Ags are relevant to our everyday life. So it's always been really interesting to me. Before coming to CME, I worked in international trade, not, trading of commodities in the futures and derivatives market. But I've been at the exchange for 11 years now, always in the same role, managing agricultural contracts, and just sort of learned the industry along the way. And that's how I am sitting here now.
That's great. And I've met a couple of the people on your team. So where you sit, what does your team look like, and how do you develop new contracts like the Southern Yellow Pine contract? I guess how does it come up, and what's the first thing that you start doing, and what does your team actually do?
So we work very closely with our ag business line. As my colleague Tom Crane likes to say, the research team builds the product and the business line grows the product. So new product ideas can come from, our internal research, but mostly they come from hearing directly from customers. One of the things that, makes a futures contract work is that the commercial participants who have physical exposure want to trade it. So they see a need for a derivatives contract. There's a, inherent price risk that they aren't able to manage without the presence of a futures contract. And so they come to us and ask us to look into it. So we have it's more art than science. There's not a checklist of what an ideal market looks like, but we, ascertain the notional size of the market. We understand if there's a good balance of buyers and sellers. We ask industry participants if they see a need for this contract. And then we get into sort of the details of what is this contract going to look like? What's the contract size going to be? Is it going to be financially settled or physically delivered? And so go down the path of putting together those puzzle pieces to decide what a new futures contract would look like. And that's all done, in conjunction with a ton of other teams here at the exchange. Mostly when we say the ag team, we're referring to the ag business line, ag research, and client development and sales and marketing, essentially.
It's crazy. I just live in the forest products world, so all I think about all day is the legacy contract and the Southern Yellow Pine contract. But I keep forgetting that you probably have all types of people looking for ways to manage chaos in certain commodities coming to you on all different contracts. Are you always in the process of developing and designing, changing, altering existing contracts, or developing new ones, your group?
Yeah, absolutely. I would say 50% of my job is contract maintenance. So, making amendments to existing contracts. We've had corn, wheat, and oats since 1877, trading continuously. And certainly those markets don't look the same today that they looked back then. And so that's been teams at the exchange making amendments to those products throughout history. That's the majority of, my role, essentially. And then I would say 40% of the time is looking at new products, developing new products. Certainly we look at plenty of things that don't end up getting launched for one reason or another, but we still do the due diligence of looking into them because we want to understand the markets better. Perhaps down the road, there's a better opportunity, to look at launching some of those product ideas. And then 10% of my time is content generation, writing papers, coming on podcasts, doing presentations, educating the marketplace. But my team research has people in all asset classes. I'm just lucky enough to be on the ag side of that.
I think just from watching the development of the Southern Pine contract and looking when the lumber contract gets changed in different sizes and species, I don't think most people can really appreciate, if you change one little thing, how much it affects everything else and all the different iterations you have to walk through and use game theory on to decide what happens if we do this, right? Because look, we'll get into it later, anytime a new contract launches, everybody's like, well, they should have done this, or you should have done this. There's so much detail that goes in, and I don't think anybody really realizes how little changes can affect a lot of things down the road. Does that make sense?
Yeah, I mean, better than most how long it took to redevelop the SPF contract.
Yeah.
We started talking about it when I took over 9 years ago, and it finally launched in 2022. So my boss likes to say that it's our job to make everybody a little bit unhappy, because if we've made too many people happy, then the contract isn't balanced. So when we make changes, we have to, ensure that it's for the benefit of the contract itself and not because certain customers asked us for it or because we want to give one side of the trade an advantage. It has to be balanced against any other changes that we make or, reflective of how cash markets have evolved.
For sure, for sure. And I can tell you, most people in the industry, in the lumber industry, has seen you or other members of your team at events actually like rolling up your sleeves and asking detailed questions about how things deliver, what are the different species, how do things move around. So I think rest assured, people can be comfortable from the lumber side that you've looked at all areas of the supply chain to see how lumber moves around.
I'm glad to hear that.
Yeah.
I mean, I know we spend a lot of time talking about delivery because physical delivery matters so much, even though such a small percentage of contracts ever go to delivery. And, we haven't seen an exchange delivery on the new SPF contract. But if delivery doesn't work, then the contract doesn't work. So we have to be super detail oriented and try to dot all of our I's and cross all of our T's and hope that corner cases don't occur, but we need to be prepared for when they do.
From being an agriculture major myself and knowing a little bit about the agriculture markets, I mean, my first job was a runner on the Board of Trade, and they made me run around to offices all over Chicago to deliver grain receipts that were all signed by 100 different people for delivery, right? And why is it so important that that delivery mechanism works and effectively works correctly?
Physical delivery is what makes the contracts converge, or I should say threat of physical delivery is what drives convergence. So especially as you get closer to the delivery window, that is becoming a cash contract. That's becoming some physical commodity that's going to change hands from the seller to the buyer. So if that mechanism doesn't work, or if people don't trust that mechanism is going to work, then the contract there's no reason to trade it, right? You're trading a future delivery, and if you don't trust that delivery, there's no reason to engage in the market. So really 100%. we have to get that right. I mean, less than 1% of contracts across the ag space go to physical delivery.
Yeah.
But
they shouldn't, but they should have the ability to do it on physically delivered contracts.
Right.
And look, our team here will watch the legacy contract. And if there's a mismatch, we'll look to take delivery on it, right? And I think that's what puts prices back into line.
Yeah, and we knew how important EFPs were to the lumber market. So when we redesigned the SPF contract, we purposely redesigned that process to allow for EFPs after termination of trading, but before the delivery window starts.
Yes.
Because it's always going to be more beneficial for two counterparties to come together and decide what works out mutually for the two of them, as opposed to engaging in exchange delivery. It's there if two counterparties can't come to an agreement. That's why we have those rules in place. But I think that's one of the things that we did really well on the new contract is give that EFP window for the market, for the industry to use it how they always have and how they see fit.
That's right. I want to jump into the Southern Pine contract. Could you first give us the description of what is the item and what is the location?
Yes. So this is a financially settled contract. The price references number 2 and better, 2x4, random length, Southern Yellow Pine from the east side. That is not to say that straight lengths or that central and west side can't use the contract, but that is what the prices on the screen are reflecting.
What you're saying is so Southern Pine, when the industry publication Random Lengths Fast Markets prints every week, they print 3 locations, west side, central, and east side. And east side is a large producer of 2x4, and that's what the contract is, the east side. And when you say you can still have a benefit from trading the basis off of that, I think is what you're saying, between the other regions, correct?
Yeah, absolutely. We've done some historical correlation analysis. I mean, on average, in the last 6 or 7 years, east side has correlated to central and west side about 98% of the time. So price movements in central and in west are captured in the east side prices.
Right, that's right. And how many months does the contract trade? It trades the same exact months and expiration date of the legacy contract, correct?
Exactly. The same, every other month of the year expires the business day prior to the 16th calendar day of the month. And we set that up because we had heard from the industry how important the intercommodity spread would be. Some people want to trade the relative value of SPF versus SYP. And so we tried to design the contract such that it would look and feel very similar to what the industry is used to.
And when you say, just for people listening that don't, the intercommodity spread, so people can trade the legacy contract, do the spread against the Southern Yellow Pine. And I believe, I haven't looked for it yet on my trading screen, you can actually put that symbol up and it shows the bid ask on the spread, correct?
Correct.
Okay.
We've seen a lot of trades come through that way. One spread trade will get you 5 positions of SYP and 4 positions of SPF.
Okay, that's good to know. And that simply is because the Southern Yellow Pine is 22,000 and the SPF is around 27, correct? So it gets it gets the ratio correct.
Yeah, exactly. 27,500. So they aggregate up to 110,000, approximately a rail car from the legacy contract. And so the math worked out well in that respect.
So this, you could talk hours on this. Just walk me through real quick what the development process was from beginning to end, because I want to think we talked about this 7 or 8 years ago.
Yeah, we've always heard some demand for SYP. I think a lot of factors came together to allow us to pursue the launch of it this year. First, I think the industry had a lot to learn on cash settlement, as did the exchange. The ag side hadn't had cash settled contracts before 2011 or so. And so it was relatively new for us also. I think the industry felt like physical delivery was the only way to go. And those are time consuming and expensive and very difficult to launch. And so even though we did some of the groundwork on that, it would never rose to the level of, getting support to launch a physically delivered Southern Yellow Pine contract. So for years, that was a little bit of a non-starter. When we started to look at financial settlement, we heard that some people might not believe fully in the random lengths assessment. And really, when you're launching a financial contract, just like the threat of physical delivery is there to ensure convergence, the market has to really believe in the daily or weekly prints or biweekly prints that are being put out from that price reporting agency. And over the years, we heard that far less and less. We've heard a lot of positive feedback around the daily East Side print. We partnered with Fast Markets, to really help them in any way that we could. So kudos to them for getting a daily printout that the industry looks at and, references. So those 2 things on the settlement front really came together. And then obviously you can't ignore the trend of, Canadian or British Columbian production going down and southeastern US production going up. So we just realized that we have to acknowledge that. We have to be conscious of it. It's a different world now than it was. And then the third piece of it was we had always heard and done some analysis around, can you hedge your SYP risk using the SPF contract? And over time, that correlation just wasn't there and wasn't working out. I always like to tell people that something is highly correlated until it isn't, and then you're put in a pretty bad position. So even though we've seen historically some people able to use the SPF contract to manage their SYP risk, it just wasn't penciling in as well. And so all of those factors combined for us to feel really comfortable going ahead with an SYP contract. But the industry, to their credit and to your credit, has been behind this for a lot of years and wouldn't let us forget that we had talked about launching an SYP contract.
I think what's really important, what you hit on there, is correlation, because as a trader, you have to look. Lumber is a perfect example, the legacy contract. And I think when you look at lumber versus corn, let's say with corn, you're trading corn in Arkansas, Missouri, Illinois, Iowa. You're just looking at basis difference. Corn traders are going to kill me for saying corn's basically corn. I know there's little differences if it's going to an ethanol plant and so forth with the seed content, but for the most part, you're just looking at location basis. With with lumber, you're looking at so many different items, lengths, grades, species, widths, and location that and we all tried to use just one contract for a long time to manage that risk and including Southern Yellow Pine. But if you really look at the last 2 or 3 years, if you would have tried to manage Southern Yellow Pine risk with the old contract, it wouldn't have worked out very well. So that's why I think that this contract is very timely. I think it's going to take some time to get the industry used to a cash settled product in one location and to get comfortable with trading different location or different regions off of that. But I think that'll just take time and people actually using it.
Yeah, and I think going through an expiry will help. Maybe it'll help if I talk a little bit about how that financial settlement works.
Absolutely. Because I think it's so funny. I think most people said when they, in our industry, everybody says they know exactly how things work. And the same people that say that will call me a few weeks later and be like, "Hey, can you explain to me how this works?" Right. And so, yeah, could you please tell them the difference between the legacy contract settles basically just on where the price is on that last trading day, whereas the new Southern Yellow Pine contract settles off of a daily print price created by Fast Markets Random Lengths on the last trading days of that expiring month, correct? Maybe you could tell people about that.
Yeah, exactly. So I can't speak for Fast Markets, but any PRA is going to, they have a methodology for calling around cash market physical participants and saying, what did you trade today? What was your trade price? And then they report out on a daily basis where they're assessing the East Side Southern Yellow Pine Random Lengths market. So they're doing that every day, regardless of what the exchange is doing. But for each expiry, we'll just use May since that was today. Every price that Random Lengths publishes from May 1st to May 15th is then averaged, and that becomes the final settlement price. So instead of exchanging, going through physical delivery at the end of the contract life cycle, it's purely finances credited or debited into or out of your account. But the biggest question I've gotten on cash settlement is, can you still execute EFPs? And the answer to that is absolutely yes. You can execute EFPs. So even if you're not comfortable necessarily understand, you're, a West Side producer or wholesaler, and you're not confident in how that correlation works, or, you're looking at this saying this is an East Side print, you can EFP West Side Southern Yellow Pine through this contract. So it's still inherently tied to the physical market.
I think that's the beauty about EFPs in both contracts. And, I think anybody that wants the EFP should educate yourself on them, but it's, I don't want to make it sound simple, but it's not that hard of a thing to do do an EFP, which is exchange for physical. It's a way to turn your either long or short futures position into selling or buying physical cash. And it doesn't have to be the exact specifications of the contract, which is perfect. You can EFP any species, grade, length, width on an EFP, and same with lumber. Alison, I think that's good feedback. Any West Side, Central, mill, wholesaler can EFP their product, and it don't have to be concerned it's just an East Side product.
Yeah, exactly. And we have an EFP directory up on our website. It's more SPF specific, but we're working on building out a Southern Yellow Pine EFP directory. And that's just for people who have opted in to say, I execute EFPs, I'm open to being contacted by potential counterparties to execute EFPs. So you can enter the futures market or exit the futures market using an EFP. Thank you for pointing out that it's exchange for physical. Our acronyms just sort of become our second language, and I forget to spell them out for everybody. But pretty soon we will have that for Southern Yellow Pine as well.
Yeah, no doubt. And I think I really think the industry, and I was on your website where you actually have video that shows what an EFP is, which I think you have it on the lumber site. You know which one I'm talking about?
Yeah, we do. When we relaunched the SPF contract, we did a webinar series on like frequently asked questions, and EFPs was one of them. So because we continue to get it, we left that webinar series up. I think it's a great resource, but
it's great, and I still think it's one of the this is a personal opinion. It's one of the most underutilized actions that you can do on a futures market to take advantage of it. No, it has a time and a place, but I think it's always good to look at for price discovery. What parts of the supply chain did you get involved with producing this contract? Like you got involved, mills, wholesalers, retailers, everybody. Or who did you get involved and who did you get interest from?
yeah, we talked to everybody that we know, and we've gotten a lot of inbounds from participants that we didn't know because they might not have SPF exposure, but we spoke to everybody that we know from the spruce market, especially after launching the revamp of that. Specifically, like home builder groups came forward that we hadn't traditionally had a lot of interaction with, given the size of the old spruce contract. And that's a bigger part of SYP. So that was a customer segment that traditionally hadn't been as involved. Component manufacturers also big in SYP, but of course, sawmills, wholesaler distributors, everyone across the supply chain we've spoken to in the development of this contract.
I think the contract really helps because Southern Yellow Pine, as you said in the beginning, is the largest growing fiber basket in the world, right? And I believe it's still one of the lowest cost producing regions. It's the largest amount of fiber that's consumed in the U.S. The next one is Canada and the Pacific Northwest are two regions that also produce, plus the import lumber that we get. But this contract really opened up the ability for people, like you said, that haven't hedged before or had a contract to hedge to actually have something that to use.
Yeah, and I should say we have non-commercial participants in our market. Any balanced, healthy market needs to have not just commercials or not just those with exposure to that physical product. But when we're designing futures contracts, that's who we're writing the contract for, in the sense that, hedgers need to be the backbone of it. Mm-hmm. And so all of the feedback that goes into designing a contract really comes down to commercial participants and those who have that inherent price risk, those who are producing the product, those who are consuming the product. And so that's who we really work hand in hand with to develop the contract.
Yeah, no doubt. And I think that I had lost my train of thought for a second, but one thing that I wanted to say is over the last year, especially, I've seen large truss facilities farther north, home builders, multifamily people switch over to Southern Yellow Pine. And the reason they're doing that is for a multitude of reasons, because it's more readily available. It's a growing fiber basket and people don't want to keep dual inventories. The other species are still popular being used, but I fought it for a long time, but pine is really starting to take over some of the some of the non-traditional places. Is that the right way to say that? Places that wasn't used before. Let's right. Put it that way. And I thought it was a one-off because years ago people would use it and then it would get expensive and they would quit. Now people just want to keep using it because it's just too hard to keep a dual inventory. What feedback have you gotten since this contract launched on the 31st? Was it 31st of March we launched it? You launched
yes.
it? Okay. What kind of feedback have you gotten so far? Like both positive. Let's just go positive. I don't want to go negative feedback today.
I mean, to be honest, I don't think we've gotten much negative feedback. I think because we worked so closely with the industry, and candidly, the lumber industry is fantastic to work with. So it's easy to do so. But because we got so much feedback along the way, I think it wasn't a surprise to people. We have gotten questions around, why is it east side and not an average of the three?
Yeah, I've heard that.
Yeah, I mean, I think that's a valid argument. or a
Mhm.
valid question. Eastside currently, has the most production and is the most robust underlying assessment. So when we're looking at a financial contract, we need to ensure that it's not readily susceptible to manipulation, which means that the index that we settle to has to be robust and, have a lot of participants. So Fast Markets has the most inputs into that Eastside assessment, enough to make it a daily price, which is really beneficial from an exchange perspective. And I think when you start to average, that just adds a layer of complication. Even though they're all highly correlated, I often say that sometimes an average doesn't represent anything well. So I think, that was our bias towards going with just one region. I would say that's the only feedback on that front that we've gotten, but certainly like the specs, none of this was a surprise to the industry. I think it was fortuitous timing. Markets were crazy, continue to be a little bit volatile. And so we are seeing participation, nearly every day. And we're seeing growth in open interest, which I think is great. So on the whole, we've gotten very positive feedback. We were just up in Montreal, got a lot of this was absolutely needed. It'll continue to organically grow and develop. And I think the best feedback that we've gotten has been on that intercommodity spread. Like I mentioned, we've seen a lot come through there. And I think a lot of people are thinking about that relationship and trading it.
The best. I just love what you just said about 30 seconds ago about this shows your statistical and economic background. What did you say about if you take a basket, an average of a basket price? It just makes it a little bit more confusing, right?
Yeah, I think it can lead to not representing anything well.
Yeah. I think I called you the first few days. I'm like, Allison, I'm worried about the open interest. And you're like, hey, this is normal in a contract that starts, right?
Yeah, absolutely. I mean, the success rate of contracts across all, exchanges is not great. We launch a lot of things that don't end up succeeding, but I think we don't have any worries about this. The market wants it, the industry wants it. We're continuing to see trades, like I said, almost every single day, and open interest is growing, and it's purely organic, right? It's people who are choosing to be in that market. We saw the same thing with the LBR contract when we launched it. That still had LBS, the legacy, alongside it, but we saw the same trends. So we're really, happy with it and excited. And I think it's just continuing to gain traction. What's really made me really happy is it hasn't seemed to cannibalize anything in LBR either. That, we had gotten that question, and I think we're seeing open interest in that contract grow as well.
Hey, so you just took the words out of my mouth. I had some notes down here. You've gone and seen a lot of people in the industry, and they're great. Everybody's great in this industry, but one thing in this, everybody loves the old way they've done stuff and are just like human nature, are don't like change, right? So the first thing I heard was, oh, you're going to cannibalize the existing contract, or how can I trade other basis if I can't deliver? It's like, you actually can. This is the first contract, the first expiration. You can, again, my opinion, if I think something's cheap in a different region, I can buy it and put it on the ground somewhere and sell the Eastern contract against it. Or if I think the Eastern region's too cheap, I can buy it and forward sell a different time frame depending upon what I did against it. And I think it's going to take time for people to get used to the difference between the physical delivery settlement of the old contract versus a cash settlement of this contract. That's just time, in my opinion. Does that make sense?
Yeah, I think it's kind of funny. We spent so much time talking about the delivery mechanism for SPF,
Yeah.
and it, like I said, we haven't seen an exchange delivery on that contract. So really, the two contracts function incredibly similarly. Yes, one is physically delivered and one is financially settled, but if you pretend like you're blind to that, in reality they trade very similarly. And because we don't really see exchange delivery on the SPF contract, it works the same way.
Have we had an EFP yet on the Southern Pine contract?
I'm not sure.
Okay, I'm curious. I try to look at them every day, and there's a few days I've missed. I was just curious if there was an EFP on there. And you said we've kind of had some steady growth all the time. Like, who are the people if somebody is interested in finding out more about the Southern Pine contract, how it could help them as a home builder or as a multifamily builder or all of the above? What's the best way to reach out and look at what the contract's about?
That's a great question. So I do a lot of market education. And one of the things that I tell people is one of the purposes of futures contracts is price discovery. It's like we talked about at the very beginning, right? You can go on our website and you can see the prices. That benefit is conferred to the entire market. You don't have to be a participant to see this. So anyone who has physical exposure, I would start there. I would look at where our contracts are settling to understand the price relationship between what you're seeing, as a buyer or a seller, and where our contracts are settling. Fast Markets has their daily print. They have a newsletter that is free to subscribe to that has that daily price.
Good point.
The link is on our website. So before ever even contemplating participation, I think looking at those prices and understanding the price relationships is really crucial. But I always also tell people hedging is not a way to make money in the cash market and the futures market. It is meant as protection against adverse price movements. So if you have exposure to Southern Yellow Pine and you aren't hedging, you're speculating. You're speculating on what is going to happen in the cash market, and you're just open to those price swings. So yes, we have speculators in our market that don't have physical inventory or aren't looking to purchase physical inventory. And any healthy market needs those participants also. But if you're holding Southern Yellow Pine, if you're producing it or buying it, participating in our market is a way of protecting yourself against swings in the cash market, because the cash market and the futures market are highly correlated. That's the point of them. And so adverse conditions in the cash market will be offset by your futures position and vice versa.
I mean, the way I can kind of sum it up is just learning about if somewhere you're a small home builder, you're a big home builder, you're a treater, and all you've been relying on over the years is what somebody tells you a price is. That's great. Keep doing that. It's just smart to actually know what the commodity that's trading on an exchange is doing and what it means relative to you. And the reason I think it's smart, whether you use it or not, it's information. Information is power. And I'm telling you, when you go on the CME website and look at it, even if you don't trade it, start asking yourself questions. What does this mean to me? Maybe it won't mean anything to you, but I can tell you, for many people that have Southern Pine or other types of lumber in their spend, knowing what that price means daily to them, but it's smart. And you know what's funny, Allison? Part of me as a trader, as a distributor too, the selfish part, I don't want other people to know that much information, because that's why the bid-ask spread can stay so wide on cash, right? I used to have people I worked with said, don't give anybody information because we love a wide bid-ask spread because we can make more money that way, right? So the great thing about an exchange traded product is it generally is the truth in the market where the market's trading at a point in time. And that's information that's hard to get from a lot of people.
Yeah, one of the questions that I get across all commodities is, how does the exchange decide what the price is? And I love getting the question because it allows me to educate the market that
Exactly.
CME, we do not decide prices. We are merely the platform to bring buyers and sellers together. So the price that you're seeing on our website or on the screen, if you have CME Direct or whatever your front end is, those are transactions. Those are buyers and sellers who have agreed on prices on the screen. So CME is not in the business of ever telling the industry what the price is or setting the price. We are merely the vehicle for the market to determine the price.
Yeah, that's a great point. And again, I never want to tell people what they should or shouldn't do, but educate yourself. Honestly, if there wasn't CME contracts, personally, the way that I trade physical lumber, I couldn't keep the inventory on the ground that I keep. There would be too much risk. And like you said, it's a market price that's determined by all the participants in the market, what they want to buy and sell at that time frame. It just is, right? It doesn't have a conscience of what you think about. It just is the market.
Right.
Well, look, I really was excited you came on here today, and just kind of to sum it up a little bit, CME has a lot of data on their website that you can look at on forest products. These two contracts are traded: the legacy contract, which is a 2x4 truck contract to Chicago of different species of lumber. I believe it's hem fir, Doug fir, spruce, and I don't know if I missed anything on that one.
Yes, or SPF, stamped SPF.
Or stamped SPF. And the new contract, which just launched in March, is Southern Yellow Pine. It settles financially, which is a little different from the other market, the other contract. But for the most part, as you're going into the closing month, and if you are in the industry, you kind of know where the market's trending, if that makes sense. So in my opinion, that's when you go to the next contract and start looking at it. But that's just my opinion. But the contract is launched. It's ready to go. And if you're a producer of pine, a consumer of pine, you really should educate yourself on it and be a little bit smarter on it and take those next steps to see what it might mean to your company.
Yeah, and I would say no question is stupid. The exchange is a big place, but Team Lumber at the exchange is pretty small. So you can always reach out. You can email lumber@cmegroup.com. You will get me and you'll get my colleague, Tom Crane. And either one of us is happy to get on a call, answer questions. We love talking about it, as you can probably tell. So don't hesitate to reach out if there's something that isn't clear on our website or you have additional questions. We are happy to be a resource.
So basically, lumber@cme.com. I can just email and I'll get Tom or you.
Yep. Well, you'll get both of us. Lumber@cmegroup.com.
I'm going to change both of your email addresses now just to lumber@cme.com.
Hopefully that's my lasting legacy.
Well, Alison, thank you so much. And also thank you to your whole team in New York and there, and to your, is it right to say audiovisual? Am I dating myself from high school here? That got you all set up in your studio there. So, I mean, it was a pleasure getting this put together. I'm glad we finally got it done. And I hope everybody reaches out and gets on the Southern Yellow Pine contract.
I appreciate you having me. Thank you, Ash.
Thanks, Alison. Have a great day.
You too.
All right.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.